Hey, hello investors and future investors. Welcome to the channel. For today's video, I will be giving you a walkthrough with the triple income strategy. Now, the triple income strategy is extremely simple and extremely straightforward. I'm going to show you how to make income three different ways using the existing stocks in your portfolio. Now, if this is something of interest to you, you're trying to use your portfolio in order to grow with income, then this is definitely the right video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be exploring the triple income strategy. I have been using this strategy forever, and it has helped me grow my portfolio consistently over time. Now, those of you that are familiar with my channel, you guys will know that the strategies I present to you here are of two forms. One, each option strategy I show you gives you a way to generate consistent income. And secondly, the income that's going to be generated is going to be safe, consistent, and over time, not overnight. That is not something we do here. So, that being said, we're going to go ahead and we're going to get down and dirty with options. For today's video, we're going to be using none other than Micron Technology, which is one of my favorite stocks. If you guys go through my videos, you will see that I have several videos using this stock. So let's go ahead and I'm going to show you the first way to receive income using Micron Technologies. And like I also mentioned, you could do this with stocks you already have in your portfolio. So for income way number one, let's go ahead to trade MU options. And that's going to open up our option chain right here. Now, before we get into the income strategy number one, there's always two things I require from my viewers and my subscriber. Number one is going to be always remember to do your own due diligence before investing. What might work for my portfolio may not work for yours. And the second thing is that always make sure you have an exit strategy before entering any options trade. Now, also on this channel, we focus on helping people with small options portfolio grow their portfolio consistently over time. If you guys are interested in some extra coaching, then the link is going to be down in the description below. So back to Micron Technology. So the first thing you're going to do, we're going to go to sell and we're going to go to call and we're going to be choosing our expiration date. Now, this is an income strategy. So you want your expiration date to be further out. So for this video, you could use either May 23rd, which gives you 25 days to expiration, or you could go ahead and use the May 30th, which gives you 32 days to expiration. What you're trying to get at is monthly income. So I'm going to be using the May 23rd, which gives us 25 days to expiration. Now, stay to the end of the video. I'm going to show you how to get this stock in your portfolio for a very decent price. So now that we have sell, we have call, and we have chosen our monthly expiration date, now we're going to go ahead and choose a strike price above the current share price. And remember, this is income way number one. This is the triple income strategy. Now, let's say you know nothing about trading options or anything like that. Here's a little hack you could use. Whatever the share price is, just count 10 upwards. So the share price now is around $79. So 10 strike prices upward is going to give you the $89 strike price right here. So that's if you know nothing about options, you don't do any research, that's just a simple hack you could use. However, I'm very familiar with doing options, so I'm going to choose a strike price of $92. The $92 strike price here, it gives me a chance of profitability of 87%. Now, the reason why you want to have a very high chance of profitability is because this is an income strategy. You want to make sure to do this strategy where you do not get assigned. And I'm going to also walk you through assignment as the video goes along. So don't worry about that right now. So with the $92 strike price here, a very high chance of profitability of 87%, meaning there's an 87% chance that this trade goes in your favor. You're going to be paid because once again, this is an income generating option strategy. The amount you're going to be paid is going to be $1.04. That is in the option world. However, when you do go ahead and you translate that into the real world, you're going to realize that income is going to be $104. The reason for that is that each option contract contains 100 shares. So you simply multiply 100 by your income of $1.04, and that should give you $104. So let's go ahead. We're going to click into it. And this first income source is going to be used with the covered call option strategy. Covered call option strategy is an income generated option strategy that allows you to bring in consistent income. In this case, your income is going to be $1.04, or like I mentioned earlier, $104. That is the number one way you're going to be receiving income with the triple income option strategy. Now, way number two, let's go back to the original stock right here. Actually, no, let me jump into Google Finance. Okay, the second way you're going to be receiving income with Micron Technology is by what's known as dividends. So Micron pays a dividend of 0.58% annually. And that translates to 12 cents on a quarterly basis. So now remember, you are dealing with options here, meaning you have 100 shares in your portfolio. So you simply multiply your 12 cents per share, multiply by 100, and that's going to give you $12. So for doing absolutely nothing, just for owning the stock in your portfolio where you have to put zero effort, every 3 months, you're going to be receiving $12 in addition to your regular income of, let's say, around $100. Now, you will be able to get $100 every month because of the very high chance of profitability you are choosing. Because the chance of profitability is so high, it's a lot harder for you to get assigned. The other thing is, because you go out around 30 days, 30 days is a pretty decent time in order to avoid most of the short-term volatility that every single stock has in the stock market. Okay, so now is a good time. If you guys haven't yet, go ahead and like the video, subscribe to the channel, but most importantly, go ahead and hit that notification bell to get an alert when I post these videos. So far in the simple income option strategy, we have covered income number one, which is going to be selling covered calls against the stocks you already own in your portfolio. The next income strategy is going to be the stock you choose should be able to pay a little dividend. As modest, as tiny as a dividend is paid, it adds up. So with $12 every 3 months plus $100 every month, your income should be now $300, which is going to be $100 per month multiplied by 3. It's going to give you $300 plus your $12 that you're receiving with dividends. So now you're up to $312. So now I'm going to go ahead and jump into income number three. So income number three is where you get the majority of your money. And that is going to be through what's known as stock appreciation, or how I like to call on this channel, investment gains. Because you own 100 shares of any stock in your portfolio, that's an investment you make. Whenever the share price goes up, that is going to be a return on your investment. Now, the strike price you chose was $92. Let's say, for instance, although we did our due diligence and we chose a very high chance of profitability of 87%, I mean, the stock market could go haywire and it could just shoot up to the stars. And that's quite okay. The reason that's going to be okay is because now you're going to be assigned on your shares. Assignment simply means is that you're going to lose the shares in your portfolio. Now, let's say you decide to implement a strategy such as this one today, then you're going to have to own 100 shares of the stock in your portfolio. In order for you to own 100 shares of the stock in your portfolio, you're going to have to pay $79 per share. And we're dealing with options, so you must be able to acquire 100 shares. So that's going to be $7,900 worth of Micron in your portfolio. But now you have to sell, you're forced to sell the 100 shares because you're going to be assigned. And the reason why you're assigned at the expiration date right here, the share price is now trading above the strike price you chose. So you're going to be forced to sell your 100 shares. Now, this is how you generate the third source of income. If you are assigned, you're now going to be getting your investment gains. Your investment gains is going to be your difference between your $92 strike price you chose for your covered call option strategy and the price that you bought per share, which is $79. So you simply minus $79 from your $92 here, and that should give you around $13. Once again, do not forget, we are dealing with options here. So each option contains 100 shares. The difference of $13, you're now going to multiply that by 100 shares, and that's going to give you $1,300. And that brings us full circle with our triple income option strategy. So, income number one, selling consistent covered calls at a very high chance of profitability in order for you to continuously keep generating income. You can, however, lower your chance of profitability, which is going to give you a lot more income. However, I don't advise you to do that because you need to remember the reason why you're doing this is to get consistent income. So you need to keep the shares in your portfolio as long as you can. Now, the second way of making income was through dividends. Now, as I showed you, Micron does pay a small dividend of 12 cents per share, which nets you $12 every quarter if you own 100 shares. And the third way, we've come full circle with the triple income strategy, is by getting what's known as investment gains or capital appreciation. And through that source of income, that's where you generate the majority of your money. So it is definitely in your interest if you continue to do your covered calls at very high strike prices, which gives the share price opportunity for it to increase in value. So this is one strategy that I use in my portfolio that allows me to grow my portfolio consistently, safely over time while using some good, decent stocks. Now, if you guys enjoyed this video and you guys are actually thinking about implementing this triple income strategy and you need any additional help with it, then remember, I do offer one-on-one coaching, and that's also going to be in the description below. Now, thanks for watching. And if you guys have any questions concerning the triple income strategy, then go ahead and leave me a comment below. Now, thanks for watching. Go ahead, like the video, subscribe to the channel, and remember to hit the notification bell to get that alert whenever I post a video. But here's the most important thing, right? If there's anyone out there struggling to grow a small accounts portfolio, then feel free to share this video with them. I mean, it is only the right thing to do. Let's try to help as many people as we can. And until the next video, keep pushing your investments.